So without further ado, I'd like my panelists to just spend a minute to introduce themselves and the projects they're working on before we launch into our discussion.
My name's Prendergast. I'm a computer engineer, former nuclear reactor operator, and now a blockchain architect. So I'm working on a number of different projects, engineering essentially mechanisms for secure communication and interaction with blockchain technologies. And ultimately, my firm is working on a suite of technologies centered around cybersecurity and how we can leverage these underpinning technologies to solve some of the hard problems of today.
Good morning. My name is Julien Auchecorne. I am the COO of XBTO International. XBTO is primarily a proprietary trading firm. We use algorithmic strategies to invest in cryptocurrency markets. So at this point, we deploy liquidity globally. We trade on about 40 exchanges from the US to Asia. And I guess it's just as a function of the success of the firm, in those activities, we also kind of diversifying into other verticals such as block trading, such as venture investing, and we're also launching a fund management product.
Good morning. My name is Michael Dersham. I'm CEO of Mapay. We're a US-based company. We build an open-sourced healthcare payment network. I think what sets us apart from other folks in the cryptocurrency and blockchain arena, as compared to we are doing today. We're doing transactions. We have great intellectual property. We have great technologists that are with us today. Christos, who you will meet later on, is our platform architect. Hunter Prendergast is also part of our ICO team. We're happy to be in Bermuda. And over the last 24 hours, we've learned about the successful business climate within Bermuda, and we look forward to having further discussions about how we can utilize that to not only the benefit of our company, but also our global initiative.
Mm-hmm. Great. So prior to COALA, I was General Counsel and Chief Compliance Officer of Kraken, and I'm old enough in the space to remember when Bitcoin was just known as a decentralized currency, and we've come a long way from there. So now we've made great strides in sharding, hopefully which will lead to scalability. We're seeing some very exciting developments now with Fidelity entering the space, offering institutional trading. You're seeing innovations like custody of funds by enterprise companies, stable coins being launched to really have, to allow this ecosystem to flourish. The recent news about Yale dipping their toes now into the crypto space. Where do you guys see the ecosystem in terms of nascent stage to maturation? Where are we in this cycle?
I think to be blunt, we have really seen ourselves move through the hype cycle. We've come across what was a large part of the pinnacle of that initial hump, so to speak, within the hype curve. And we have either slid all the way down to the bottom and are moving out into what's called the plateau of utility, or maybe we're still sitting somewhere near the bottom. But I think that what we saw last year was the bubble and the hype and the explosion of this technology and just people pouring into it that did not understand business, did not have existing business models, and unfortunately out of that a lot of discredit has come to the technology because people abused the capabilities that it offered. I think that what we're seeing now is actual businesses coming in and looking at the technology as a mechanism to improve efficiency within their workflows, and that this is how we're actually going to move from promises of maybe we will to look at the amazing change we've done.
Yeah, I'd agree with that. And the way we like to kind of almost simplify that path, in what stage do we sit in, is by almost thinking about this as a three-step sequence. And to Hunter's point, the kind of step one was this kind of early creation, early adoption, and the kind of irrational hype that resulted from it. and that's deflated meaningfully since. I think that step 3 I would describe as the kind of mass adoption stage, where you get a combination of basically all the stakeholders being fully invested into the space. I'm not going to carve out all the stakeholders as I think about it, but broadly speaking, it means that you've got institutional investors who are investing in digital assets as an asset class they understand they're comfortable with, and you've got also meaningfully proven utility when it comes to actually the use of the underlying assets in real-world examples. So the way I'd put it now is that I think we're in the early throes of stage 2. And the debate is how early in stage 2 are we and how far down the line we are. So to your point, the examples you're giving about Fidelity moving in, I mean, there's probably every day there's kind of a positive catalyst in that context that we can kind of latch onto as an indication of the fact that we're moving in the right direction. But I would also say that for us to get to stage 3, there's still a lot that needs to happen. And as an industry, there's plenty of structural aspects to the way we operate, and that goes really from the nature of the technology today to even kind of governance structures and kind of compliance clarity, which still requires an enormous amount of work.
I think I agree with both. I think the exuberance that happened, I think that was a good thing to at least put the industry, if you will, on the map. But I also think the hype and the pump and dump strategy and the get quick rich schemes tarnished and gave a reputation risk, which we have to fight through. Even within our own company, I take us back to a year and a half ago when I started to read, just from a kind of intellectually intriguing way, different white papers, and we're in the healthcare space, so of course I was, reading every white paper that was out there. And then given my background of private equity, venture capital, building companies, I would read these and I would look at, the check boxes that we do as, say, an angel investor, which is, what is the management team? What is the business that they're in? What is their intellectual property? Do they have customers, right? And I read it, through those lenses, and I would say, really? And you just raised $50 million in a nanosecond? This is crazy.
Over $1 billion for years.
Yeah, and so I remember sitting with our board, and I said, we need to go through this, because I was intrigued by the way that we can raise capital and create a cadence around the business and the opportunity that we were never able to create before. But then the board said to me, yeah, but Dersh, we have reputation risk as a business. We had an ongoing business that we were looking, how do we capitalize that? And I took that to heart, and I said, of course I can make the decisions, but the board was saying, Dersh, we can't allow ourselves to be said in the same sentence as a patient toy, right? And so we pulled away, but then coming back into the new year, I pressed it forward, and I met with some of my friends at Goldman Sachs and some others, and we really started to think through, this new type of financial structure, but also the payment network that we had built and the utility that we can provide for that currency and provide the stability around it, like Jesse Lund at IBM speaks about, right? And I said, we've got to go. Like, we have to be the poster child of how we bring a business through a alternative way of raising capital, as well as an alternative way of building a community sovereign utility of a coin and currency, which can transact within a certain industry. And that's what we've created. And again, just going back in my business career, I see us probably in that 2.0 stance, but we as an industry really need to collectively fight through to finally gain the credibility and achieve what blockchain and alternative currency can provide.
Well, as a lawyer, I've also been working in gray areas of law for quite some time. So in a former life, I litigated issues, novel issues, issues of first impression. So things like whether YouTube could exist, whether you could really allow a platform that allowed third parties to do all sorts of things without permission. Now that sounds like a naive question now, and certainly without trailblazers like you guys, ecosystems like this couldn't exist, couldn't launch, and couldn't flourish. And I just want to clarify a myth in any kind of new technology. A lot of practitioners who are not business practitioners, who are rather naive about the way the law works, feel that when something new emerges, that there's no law around it. Now, it's a complete myth. There are bodies of law that exist that are waiting to be interpreted and applied into these new realms. Now, that translation piece is very complicated for judges, for lawyers, for practitioners. In the meantime, you have this cloud of uncertainty as to what will eventually be the determination of these things. So I really appreciate some of the comments about needing to fill that gap and needing to, on our part in the blockchain community, people are very hard at work at trying to figure out what a governance structure looks like for a new paradigm, for example, or how to explain to a regulator who might not be facile in the technology as to how their policy goals are met by these new technologies or where they're challenged. Where do you guys see the real pain points, the gaps that need to be filled in order for these technologies to be deployed at scale?
So I would say, obviously, one of the points you touched on here is regulatory, meaning, we've been going back to how do you do this correctly. So to tell a story, my company, when we first began, we're working towards going into a token sale. And this was in 2017. We were building up to this point, and we spent far more money than I would ever like to admit to in the public domain in trying to make sure we observed all of the Regulation D and all of the Regulation S offering compliance requirements, going through AML, KYC, OFAC, navigating the uncertainty of the space at a time when people still weren't actually certain how to even do it. And it has improved some since then. But I can say that oftentimes I felt like I was walking with my lawyers hand in hand, and neither of us had a clue what was going on. Sometimes they knew what was going on, and sometimes I did. But it took both of us working very closely together, and even calling into the Securities Exchange Commission of the United States and asking questions about different topics. And of course, the answers were often, well, maybe this is how it could be done, but I don't think that I can offer you a formal opinion on that. Those are the hard points that have to be more clearly defined, which is we need a very, we should welcome regulation in the sense that it will allow us to do our jobs without so much wasted effort, because it's a question of efficiency. It's a question of, we have established laws for raising capital, we have established laws for all of that. It's moreover now, give us a known set of rules and let us operate inside of those and know that we won't end up on a podium trying to explain to someone we didn't want to talk to why we thought we were doing doing everything correctly but weren't. And I think Bermuda's kind of on the right path here. They're setting that framework up, which is really exciting.
Yeah, I agree with that. I think that, as operators, to be honest, you can point at any part of the industry and I'll tell you that there's a massive pain point because I've got my head in the trough all day. But regulation is a very interesting point in that context, because as operators, having the regulatory environment being almost a known unknown is an extraordinarily difficult kind of risk to manage and quantify for a business. And actually that's what's driven us to incorporate and operate at Bermuda for all our offshore activities, is because we felt that Bermuda was going to deliver just that. And there's that kind of level of clarity and certainty over the specific point, which we think is tantamount to the scaling of the industry. If you think about regulation globally at this point, it's still a very fragmented landscape. And the world, I'd say, bluntly speaking, is kind of divided between the US and the rest. The US has got, when it comes to securities law, has got a kind of definition of securities which creates almost an environment in which anything that's basically being issued kind of moves into securities law. And I think that is fundamentally very complicated for the scaling of blockchain technologies in the US. But then you've got the rest of the world, and you've got this kind of multi-layered also aspect of regulation, which is what we feel is fantastic about Bermuda is the clarity we have locally. But, Bermuda is also, I mean, it's a weird point you're making, but, it's not an island in a way, in the sense that,
No,
what the OECD says, what the European Union says, has a real impact as well on what fundamentally we can even do here. I think that beyond that, and there's the regulatory uncertainty also creates a bit of contagion on other aspects of how we operate. And to give you an example, having a decent banking partners, if you operate in our space, is exceptionally complicated. And if you ask any blockchain company operator today, I would say they're good, especially for investors, in fact. I'd say that the vast majority of us bank with fantastic banking partners, but not household names, right? So that kind of, the support of the banking industry is also very much lagging at this point. I could then kind of run on about, get into the weeds about what the audit world thinks about blockchain, and I probably won't, but I suppose that, going back to my original point about in the early thoughts of stage 2, all these people are basically stakeholders that need to be on board for this to actually scale and reach its full potential. And it's baby steps, but I think there's a lot ahead of us.
Absolutely.
As I mentioned earlier, when we decided to go through this process of an alternative way of capitalizing our company, we knew that the SEC was not giving any guidance. So we were in no man's territory, but certainly we didn't want to have a case retrospectively come down to us. I say it jokingly, I don't look well in an orange jumpsuit. And so what we did again at the board level was to say, let's self-regulate ourselves as if we were doing it in a legacy fashion, right? Because at that point, I think nobody can look at us then retrospectively and say, you did this wrong, if we followed the guidance which was already established, even though it wasn't, written within that legal framework, specifically around this type of raising capital. So that's what we've done, and we're still waiting for the SEC to provide true guidance in their guidance statements, and they always say it's 6 months coming forward, and that was 6 months ago or 12 months ago, right?
Yeah.
So I think so we've done that internally with our first investment rounds. I think what's interesting to me now that I'm out in more of the global community, where we're looking at areas like Canada, Malta, Bermuda, and even over the last couple of weeks, again, as we're trying to build a best practice on how to do this so that others can use our playbook, that we're looking at building development, business, and legal nodes in these particular environments like Toronto, like Malta, like Dubai. And even last night I was talking to Stan about, wouldn't it be interesting as we do that, then to have as a global hub or unifier, if you will, Bermuda, to act as that, to be continued, but pretty interesting.
Yes, and actually the very interesting about this technology is that it's global. It lives on the internet. And I remember early on in the space, when Bitcoin and when cryptocurrencies and blockchains were confined to Bitcoin only, there were countries that attempted, for example, to take steps to ban it because they feared it. And they realized very quickly that in order to do that, they'd have to shut down the internet in their country, which is an untenable step. So this technology presents all of these vast opportunities. It's multi-jurisdictional, but it's also a riddle of jurisdiction. And it also requires, because it's inherently a network, it requires the cooperation of so many players and so many layers of stakeholders to make this work. So actually that's what COALA works on, is bringing together people from various sectors, the leading architects in the space, the leading academics, to actually have fact-based research that drives all of this technology and the policies that result. What I'm wondering now is, we see here really, on one hand, a technology that enables folks to democratize access. On the other hand, that raises a lot of alarms about new kinds of safeguards. You know, and then I think in the first instance, I've heard a lot about getting to the real utility of blockchains or getting to efficiency of markets. What I'd like to tease out is, do you guys see this as the utility of blockchains as efficiency of workflows, of just creating more liquid and more accessible markets, or are we seeing a really different paradigm shift? You know, I remember when the FinCEN guidance came out, for example, they could only confine, they didn't know which asset class to put a cryptocurrency in, for example. And we're seeing that this is much more than currency, that this is not just a token that enables markets, but rather things that enable cooperation, new kinds of networks, new kinds of metrics. Where do you guys see the real utility of blockchains?
I mean, it depends very much if we're talking about fully decentralized systems or if we're talking about semi-centralized systems or fully centralized systems that use chains for auditability. I mean, there's so many different applications. I think that if we're talking about fully decentralized systems, it allows for interaction and exchange of value without the need for as much trust until we've reached such a time as governments and blockchain technology are more closely linked. I won't say it's without any trust whatsoever unless we're talking about the exchange of value for a purely digital asset, in which case it's trivial. But you know, this could be things like the purchase of web domains and that sort of things. We can engineer those types of things to be very fluid and easily done. It's more about, can we exchange a piece of real property and have that trustless interaction that blockchain technology offers be extended into the physical world. And I think that it's going to take a little bit more maturity within, governments coming back. I think that the other piece here in terms of what is the utility of a blockchain, it's temporal truth. It's not that, in the past when we had a database somewhere in the cloud, we could go and we could ask it what a value was. And whatever value it told us was the truth because that's what was stored in the database. The difference here is that we can know that something is true now and we can know that it's been true for all of time before that, and that nothing has been omitted and nothing has been modified. And as soon as something changes, we'll know that it's been changed and we can address that. And this is very powerful for financial systems, transparent markets. And I'm sure this gentleman can comment on a lot of those pieces far better than I. But I think the places, other than the obvious kind of that I've been walking through, is that blockchains are ultimately really good permission access management systems. They allow you to control privilege and right very granular. And that's an exciting concept as well that a lot of people haven't quite explored all the way out. But I'll quit kind of blabbing.
Yeah, I mean, I'll start by saying that there's absolutely no way I could explain better than you did. So I'll start by, I think it's a great summary of what almost the ideological core underpinning enthusiasm for the blockchain constitutes. In a jumping almost into kind of a more tangible kind of environment, there is, and I think this is what you're alluding to yourself. I mean, like it's also as a new form of kind of funding mechanism, there's also extraordinary interest on that topic. And you look at the way that companies fund themselves today, and you look also at some of the inefficiencies that are linked to even issuing debt, for example. And if you look at like how deeply intermediated and how actually quite archaic some of those instruments are still structured today, and we're talking one of the deepest asset classes in the world, right? And when you kind of overlay what kind of blockchain applications could actually deliver in that context, you start looking at it's not necessarily actually like kind of completely redirecting, I suppose, the way the kind of financial markets work today, but definitely genuine efficiency creations, which at the very least, I think will become a real point of a real benefit to issuers, and I think arguably to investors as well. I think that in that context, it's going to require some adaptation from the kind of intermediaries that are actually operating traditionally in that space. But you know, if you think about, I'm referring to kind of the banks, I guess, in that context. But I'm also kind of quite optimistic about the fact that they'll adapt because they always have. But yeah, so as a funding mechanism, I think there's the real world applications there that are particularly interesting.
Yes, actually, it was quite interesting to see banks initially very afraid, actually cautious that their payment rails would be eaten up by this market. And then within the space of a couple years of maturation, they realized that there are enormous opportunities for them, not only to create more efficient operations, but to actually access new sources of liquidity and to create new kinds of instruments and more accountability and transparency in their operations.
You know, I think whenever we have these discussions, oftentimes people group the discussion when it has to be separated into the blockchain technology itself and what that provides, like Hunter so eloquently can describe, and even last night doing some algebra for us on a piece of paper and showing them. But so I think you need to segment that out from the alternative currencies and what that provides, because they're two very different subjects and need to be discussed in that manner, even though they overlap. So these guys talk about the technology itself. Let me talk about the utility of currency and what's needed. If we go back to, you know, even like Econ 101, right? And you talk about what's needed in a currency. You talk about the credibility of it, the trust of it, the utility of it, the verifiable and exchangeability of it, right? So if you look at these alternative currencies that have been done through various ICOs, and you look at the marketplaces that they are in, 99% of them don't match any of those criteria. What we're doing in the healthcare space, and I think when you look at these different industry sectors, and we look at how we can build a kind of community sovereignty around that currency. You know, in the U.S. alone, we have roughly $3 trillion, which, you know, traverses that medical industry in healthcare transfer payments. Globally, it's $8 trillion. That's, you know, and if I put that in perspective, gold standard, you know, as an underlying asset class, is roughly 8.2 trillion. So I view it as now we can build a community of healthcare payments, if you will, that has an asset class or collateralized by those companies or governments that are transferring fiat currency. So now I know I'm going a little probably intellectually deep, but when you start really thinking about that, now you say, can I do those check boxes of credibility, utility, trustworthiness, and a marketplace that needs a alternative way globally beyond borders to be able to, you know, transact in the healthcare space. And I would make that argument that yes, and the only way that we can do it is through blockchain technology as well as alternative digital currency.
Absolutely. And so blockchain represents this incredibly powerful global infrastructure that can serve as a source of trust that allows folks to be able to coordinate, trade, create all sorts of layers of computable contracts on top of this infrastructure globally, opening up markets. We need to close our panel, but for the benefit of the folks in the room, just want to put on your fortune-telling hats. Where will we be next year? You guys have Few words.
So the biggest thing that's coming is secure multi-party randomization. So it's a bunch of fancy words, but basically at the end of the day, what it means is that we can do more transactions faster and more securely. So this is one of the biggest things that's coming. This is going to revolutionize a lot of this technology because it's going to increase the capacity of its ability to augment existing networks, which also means that less sharding has to be done, which means that less complexity has to be addressed. So from a technical side, that is where I'm looking at least.
Yet again, I'll agree with Hunter on that one. No, and because it's a very, very important thing to consider, because one of the biggest kind of structural limitations to the current, especially the cryptocurrencies in the current form, is they have kind of capacity constraints. So the number of transactions that can actually be processed is not particularly competitive relative to other systems in its current form. So what you're describing here for us is actually something we're invested in ourselves, looking, for example, at Bitcoin sidechains. It's something that structurally will, I think, kind of give the underpinning technology a lot more validity. I think that beyond that, everything that I've described in terms of the overall kind of stakeholder progress for the industry, if I was going to say what it looks like next year, this is going to be quite ironic as an investor, right? But I'd be pretty happy if the markets were still trading at levels comparable to the ones that are trading at today, if in the background we'd all make progress around all the structural clarity that's required. And add to that a bit more, I think a few announcements, more tangible announcements from the likes of Fidelity, from the likes of Citigroup and let's throw in an ETF that finally gets approved in the mix.
We're all holding our breath.
And then I think and then there starts to have real reasons to be very optimistic about what the future looks like.
I think the evangelists around this have done, in a lot of ways, a good thing, but I also think they've done a disservice in that, I've been on panels where, folks just sprinkle blockchain pixie dust and start yelling decentralized, 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 and the seas will part and kumbaya, right? I think that if there's a more prudent and pragmatic approach to it, where we speak openly and honestly about what it can bring, temper some of the overzealousness, and then also provide I hope there becomes a real credibility in the CXO suite and a knowledge base so that we can have real business discussions. And I also would think that some of this private voice, when we see folks like Fidelity that had a private voice that was probably that they had an excitement about it, but finally they came out publicly, because when I talked to a number of different industry folks, they certainly have a different private voice than their public voice. And so my hope would be a year from now that starts to trickle into the mainstream to give us credibility.
We didn't have any kind of contention, I think, on the panel, so I might just kind of inject a little bit of that just as we're closing in. I think that the zealousness that you're describing works both ways, right? So, in a world where news has to be fundamentally polarized, you only ever hear from the guy that says it's going to $100,000 next year, but you also hear from the guys who say it's a complete scam, in equal measure. I think that, to depict a much more boring future, the truth is going to be somewhere in the middle. And so we need the zealots in a way to almost kind of counterbalance the people who are irrational detractors, I think, of the technology. But in the meantime, I think that, I guess it's guys like us who just going to kind of prod along and make sure actually tangible things happen.
Yeah, absolutely. Well, I'd like to thank my panelists. I highly encourage you guys to come up and talk to them after this, during the break, and thank you.